Identifying the best investment opportunities early enough is the best thing you can give yourself in your financial success journey. Watch to the end to better understand the 10 assets that are a must-have. Angel investing is a high-income investment opportunity to accelerate your growth. As an angel investor, you will gain an ownership stake or equity in a company in its early stages by providing financial support to support its operations. Owning a percentage of a startup company allows you to multiply your income once the company comes into operation. For example, I invest $10,000 in a startup company for a 20% stake, and then once operations begin, the company value grows by 5 times the initial capital.
And angel investing allows you some more control than putting it in a fund or putting it in the stock market or picking a stock, which if you pick a single stock, the odds are good that you're not going to do well. You're better off following Eugene Fama's theory anyway. So if you invest in things that you know, things that are close to home, you can bring your network to bear to help those companies grow.
That means my investment of $10,000 will have grown 5 times to $50,000. Angel investing will allow you to meet and network with other investors who have been in the field for a while and have experience. This will open up opportunities that can be helpful in your financial journey. Investing in precious metals is a highly lucrative opportunity to build wealth. Precious metals are known as a great way to diversify your portfolio. These metals, gold and silver, have been an important asset class for investors since ancient times. Investors use these metals as a hedge against inflation. Gold is often used as a store of value even when banks and money become unstable. This makes it a safe investment to consider taking. Silver is the second most common, most traded metal. Just like gold, silver is also highly used in jewelry making. These precious metals are easily liquidated. This means that you can easily convert them to cash.
Precious metals is more so a long-term, quote-unquote, investment. In the short term, they don't really move all that much. Every now and then, they will have a quick spike in price or a drop in price, but for the most part, they're relatively steady.
A liquid asset is an advantage to your portfolio as you can sell to access cash when some of your assets might be declining in value and also have easy access to capital to invest in other areas. There are different ways in which you can invest in precious metals. The first method is direct ownership. You will physically purchase the coins or the bars of metal of your choice from a dealer and then store it in safe storage. Another way of investing in metals is through an ETF. The ETFs are traded in a stock exchange. They allow you to invest in precious metals using little amounts of capital. When investing in precious metals, you should conduct enough research to identify the right dealer or broker. This will prevent you from purchasing low-quality products or fake ones. Also, remember there are other types of precious metals such as platinum and palladium. Investing in dividend stocks is a strategy that allows you to receive regular payouts. Dividends are a percentage of a company's profits that are distributed to investors regularly. Dividend stocks are an excellent way to generate income from your investments, and they will also help you grow your wealth with time. Before investing in any stocks, I look for one with a long history of dividend payments and a solid financial position. This is a relatively safe investment and a good stream of income. You have to do enough research to understand which stocks are suitable for your investment goals. For instance, stocks with high dividend yields will be perfect if you want to grow your wealth over time. Consider diversifying your portfolio and avoid putting all your eggs in one basket. Business is traditional and one of the most successful assets you can have to help grow your wealth. Investing in a business means allocating financial resources into a venture to generate profits. Before starting a business, you must conduct thorough research to understand how the business world works. Remember that the main goal is to have a return on investment to grow your wealth and ensure the business is operational. There are many business opportunities you can venture into. Choosing the right business depends on your preferences and personality. I like to be involved in an industry where I understand how it works and enjoy doing it as well. I own several businesses. One of my businesses is automated and does not require constant attention. It allows me to concentrate my energy and time on other areas of my life. I have a strong management team to lead my physical business. Strong leadership is very crucial to the success of my ventures. I also analyze the financial health of my business by reviewing the financial statements, including income statements and balance sheets. I look for signs of profitability, stability, and growth.
Well, we've read a lot of reports, I will tell you that, and we start by looking at the reports of companies that we think we can understand. So we hope to be reading reports, and I do read hundreds of them every year. We hope to be reading reports of businesses that are understandable to us, and then we see from that report whether the management is telling us about the things that we would want to know about if we owned 100% of the company.
Accountability is vital in business. If you do not have an excellent financial background, I advise you to seek professional guidance for comprehensive analysis. Would you rather save money on a regular savings account or an account that gives you up to 10 times more yield? If your answer is the latter, then the next asset class is well suited for you. A high-yield savings account is an asset class that you should have as soon as possible. This is a type of savings account that offers a higher interest rate compared to traditional savings accounts. There are several options to choose from. Typically, these accounts are offered by online banks, although traditional banks also provide them. CIT Bank offers 4.6% annual percentage yields with no service fee, UFB Direct 4.81%, and Popular Direct 4.85%. These are just a few of the many other options available. Before choosing the account, there are several factors to put into consideration. The compounding method used is my #1 consideration, and I would instead pick an account that compounds interest monthly than annually because I will gain more yield. Also, you should look into the required initial deposit, service fees, and minimum balance required. This should give you an insight into the account best tailored for you. High-yield savings accounts are insured by the Federal Deposit Insurance Corporation, FDIC, which means your deposits are protected even if the bank fails. Knowing that your investment is safe as it grows gives you peace of mind. REITs, or real estate investment trusts, are a very attractive form of investment where you can diversify your portfolio. REITs is a company that allows individual investors who are seeking a regular cash flow to invest in large-scale, income-generating properties such as apartment complexes, malls, hotels, and warehouses. REITs have a track record of delivering competitive total returns, steady dividend income, and long-term capital appreciation. Real estate investment trust allows you to invest small amounts of money, unlike traditional real estate investment, which may require huge capital. With this investment, you gain exposure to a diversified portfolio which otherwise would have been a challenge to achieve on an individual basis.
There are many good investments. There are many good investments that have nice dividend yields of 5 to 7, 8%, low risk, offer growth that adds between 2 and 5% to that dividend yield. So especially if you have it in a non-taxable account, then you can really enjoy the compounding of that dividend without, let's say, risk.
The fact that REITs are professionally managed relieves you from the burden of managing property directly. I recommend that you consider investing in REITs as it has proven to be a highly lucrative venture over time. However, make sure to do a proper investigation to understand how it works. As someone seeking financial freedom and wealth growth, I have come to understand that the best investment opportunities are those with a proven history of profitability. One such opportunity is the S&P 500 Index Fund. The S&P 500 is a collection of the 500 largest publicly traded companies in the United States. This investment exposes you to a portfolio of companies and reduces the risk of trading individual stocks. The S&P 500 Index Fund has solid long-term returns. For the last 5 years, it has grown by over 50%, with an average of 10% per year over the past 50 years. The trend is likely going to continue according to historical data. The fund typically has low fees, which means that more of your investment goes towards returns. Investing in the S&P 500 Index Fund is passive, meaning you do not have to research, analyze, and choose individual stocks actively. This makes it simple if you are looking for an investment opportunity with a hands-off approach. Intellectual property (IP) investment is a passive income investment opportunity that allows you to access money from your intellect's intangible creations. Investing in intellectual property involves allocating financial resources to acquiring, protecting, and leveraging intellectual property assets to generate revenue and maximize the asset's value. Intellectual properties can be acquired through patents, copyrights, trademarks, or trade secrets.
So let's start talking about those intangible assets. Now, these are your ideas, know-how, your processes. They're the foundation of your business and what sets you apart from your competitors.
So here are some examples of different types of IPs that every business has but rarely considers, starting with trademarks.
So if you have a specific business name, special name for your products, or logo, those are all intangible assets that can be trademarked.
Patents will give you exclusive rights as an inventor of a product to make, use, and sell the invention for a period of 20 years. This will allow you to solely make wealth by capitalizing on your invention. Copyrights protect original works such as books, music, movies, and software. As the owner, you have the exclusive right to reproduce, distribute, perform, display, and create any derivatives from the work. Trademarks protect words, phrases, symbols, and designs that identify products from others. As the name suggests, trade secrets are confidential information that gives a business an advantage over its competitors. Investing in IPs is a great investment opportunity that is less involving and gives you the upper hand over your competitors. This allows you to accumulate wealth over time. Investing in royalties. Royalties are payments made to an owner of an asset. Royalties are closely linked to intellectual property. They are typically paid as a percentage of the revenue generated from the use of intellectual property that you own. I can license a company to sell software I have developed and registered as my creation. The company will then pay me a percentage of any income generated from the sale of the software. Royalties are a significant source of income for the owner of the asset. The best example is the music industry, which generates billions of dollars yearly in royalties. Musicians who have signed a deal with a distribution company get a percentage of every copy of their single or album sold. As an investor, I will have passive income from royalties, allowing me to do other things as I generate revenue and grow my wealth. I advise any intellectual property investor to consider royalties as an investment opportunity, as it does not take much of your time. The last asset class on our list is annuities. An annuity is an agreement between you and an insurance company. You pay a premium to the insurance, and in return, the insurance company will agree to make payments to you for a specified period or the rest of your life. Annuities are a good option for people who want to ensure a steady income stream during retirement. What I like most about annuities is the fact that they offer stability with steady income even during financially challenging periods. This comes in handy, especially if you want to protect yourself from loans and creditors. There are two types of annuity, that is, fixed and variable. A fixed annuity offers a guaranteed rate of return on your investment with a fixed interest rate. Variable annuity, however, is subject to market fluctuations, meaning your returns could be higher, but they could also be lower. It is always advisable to do in-depth research before making any investment, and this is no exception either. Thank you for sticking with me as we learn these invaluable lessons. Share your thoughts in the comment section below and tell us any other asset classes you feel are a must-have. If you found value in the video, please give it a thumbs up and subscribe to the channel for more insightful content. Also, hit the notification bell to stay updated with the latest uploads. Until next time, take care and keep striving for greatness. Bye!